Hey, everybody. So I know there's a couple of second delay with what's going on. So I hope that this is working the way I expect it to. It's the first time I've done this particular style. Anybody who knows me knows I do live videos. It's not that big a deal, but I'm trying to make it look super profesh and all the rest of it. And what we're going to be talking about today is some topics which I'm kind of passionate about because I feel like there is a lot of misinformation about them. And it depends on who we're talking to as far as lenders go, etc. So I'm going to bring in Kirk Van Horn. Hey, Kirk.
Hey, Melanie, how are you?
Good. So Kirk is a broker with Best Home Financial. What does that mean?
Well, I'm part of a larger corporation called AmeriFirst Financial out of Kalamazoo, and we are what's called true mortgage brokers, mortgage bankers, excuse me. We originate our own loans, we underwrite our own loans, we close them, and we fund them, and we service them. So we control from A to Z, which allows us to be more flexible in this time, this crazy time that we're in right now. So we're pretty happy with the way we stand.
What do you think you do the most of? Like, what are the most popular loan types that we
We
see?
do, as an office, as a branch, about 55% government loans, which would be a breakdown between rural development. AmeriFirst is the largest rural development lender in the state of Michigan, and VA loans and FHA loans. So we do a lot of those. We specialize in those. Those are the most difficult types of loans to do. But I grew up in the business doing them, and we find them very easy to understand.
Why do you think that they're so difficult?
Well, you're dealing with truly with the government entity and the government regulations, and there's just another layer of information. Not very many people specialize in them, which we do. So there's just the knowledge is just not out there, and so we have to come in and it's a whole new set of regulations. So a lot of realtors aren't that familiar with them, so we have to get that information out to them, and so it creates a little drama once in a while.
Well, I love to bring you challenging ones.
Yeah, but you do, and we get them all closed. I hope we do.
So when I feel like I'm pretty familiar with them. What are the things that you would love agents to know about them that would make your life easier? How could they be better educating their clients so that they could get through the process simpler?
Well, it's big about observation. When they're going to a listing and they're going to write an FHA or rural development offer, there are potential that there are some repairs that are required, peeling paint, if the house is in disrepair, holes in walls, and things like that. And if a realtor can see those and address those up front, during the purchase agreement or during inspections, it makes things much easier. Also, well and septic inspections when you're dealing with rural real estate, knowing that you have to order a well or septic inspection is also important to know.
Okay, that's great. I think a lot of people hear them, and so they think that I often see listing agents who don't put the option to go that because they don't understand what the requirements are. That can make it even more challenging to get homes sold. So it's good to know that we can actually educate our clients to make it easier.
You bring that up,
Um,
and obviously we're going to be going into a whole, once the realtor is allowed to work in the state of Michigan, which we hope is going to be a week or so, we are going to be a whole new, when this market reopens, it's going to be a whole new market. And I'm sure listing agents are going to want to get their houses shown as often as possible. And a lot of them now will have to take a look at rural development or FHA because it'll bring a lot more buyers in the house.
Yeah, I think that makes a big difference, especially considering our economy. We have a lot on the very high and a lot on the very low. And I think one of the things that the way I look at it for my clients is that you've got a lot of people out there who are able to rent and they're able to pay their bills and they're able to make that happen. And means that there's not money left over to save to get a down payment. So FHA and rural development are amazing and being able to help somebody be able to gain a foothold in home.
I agree. I agree. It's a great product.
So at the beginning of this COVID thing, what we were seeing is that the interest rates had really dropped, and it seemed to me everybody was doing refinancing. Did you guys end up with a glut of refinancing at the beginning?
No, it's interesting because the interest rates for the first week or so were very false reporting. The federal government was hugely involved, and the markets were just trading at crazy highs and lows. You'd have great rates for a couple hours and horrible rates for a day or two. So we did a little bit, but not too much. It's only been in the last 2 or 3 weeks that the refinances have really come on because the rates have gotten so good and they've been stable. Because a lot of times you promise an interest rate to somebody at 9 in the morning and you go and lock them in at 9:45 and it'll be gone. So we
Okay.
were very careful.
And how often do you have that much volatility?
This is rare. I mean, this volatility like this happens every couple of years, if even not every decade. So this was very odd, and that's why we stayed away from it because it made no one look good when you could promise something and couldn't deliver it.
Okay. So at the same time, I'm thinking that a lot of people probably think it's a difficult time to do refinancing. Do you think it's a good time now to be able to refinance?
Well, I think it's an excellent time. The rates are super low. You're not fighting with purchase business to get stuff done, so the appraisers are doing things quickly. If you are still employed, I think it's a great time, and you can cut a lot of money off your payment. We're saving people $300, $500, $700 a month. It's great.
Fantastic. So I've heard a lot of like the local and the larger lenders have been increasing the minimum credit, which makes it much harder for somebody to buy a home. Have you seen much of that?
Yeah, we've pretty much seen it across the board on the government loans. They've increased, a lot of the lenders have increased the minimum FICO scores. They used to be 580, 600. Now we're seeing them 640 and 660. We as a company have chosen not to do that. We have our old FICO scores, which are still 580, or credit scores, which are still 580. The reason we decided to do that, the owners of the company said, we do these loans, these government loans. We've been doing them for so long and so many of them, we know where the risks are. The current risk in the environment is employment. Somebody that's working today will be working in 30 days. And we just decided to take a more serious, intense look at employment and and just look at that side as opposed to look at the credit side. So that's what we're doing.
Gotcha. Do you think that going forward that will continue?
I think that the lenders that have moved the credit scores will keep it up there as long as as long as this COVID-19 is messing with the employment. If they start to see people start going back to work and this huge unemployment numbers start dropping, I think they'll drop it too. Probably towards the end of the summer is what I'm thinking.
Okay. What about like forbearance?
Forbearance is the most asked question in the mortgage business today. There's been a lot of misinformation about it. Forbearance, frankly, is not a very good deal. If you truly need to skip payments, it is a great opportunity, but you're going to be required just to make those payments up. They offer forbearances in 3-month periods. So if you select forbearance, you don't have to make a payment for 3 months. But on the fourth month, you're required to make all 4 payments. And who's going to be able to do that? Very few people. Now, if you still don't have the money then you can ask for another 3 months, another 3 months, up to 12 months. If you still can't make it up then you'll be offered some sort of refinance terms, and it might not be the best. They might not be the best terms. So we're recommending no one use forbearance unless you absolutely have to. Now, there might be a change down the road. They might change that. There's been that concept of skipping payments and putting them on the back of your mortgage. But right now, that's not allowed.
Well, see, that isn't that called deferment? And I mean, in reality, most of the loans aren't structured to add deferment. Forbearance is you miss it and you have to catch it up.
Yeah, because there's a note out there. There's a note, a 30-year note, and it's dated 30 years from the date that you buy the home that'll be paid off. You can't just extend that. You can't just wave a magic wand and extend that unless you get the federal government involved. You'd have to refile a note. So that's where the problem is right now. The federal government might decide and develop some sort of mechanism to allow that to happen. But right now, they have not.
So we actually have a question from Heidi Fuchs. She said, what is the best way to keep track of all the changes in interest rates?
That's a good question. We find it difficult ourselves. You're going to have to call or, have a conference, choose your lender and say, hey, here's the interest rate I'm interested in. Call me when it gets that. And then I put people on a list. And when the rates get to that, I make a phone call. Of course, I always say, well, is it going to go lower? And I'm like, hey, how low is it going to go? We don't know. But that's what we do. Just call your lender and say, here's what I'm thinking. And somebody asked me today, do you think rates are going to go to 2.5? And I said, no, I don't think they're going to go to 2.5 on a 30-year fix. They're 3.25 today. So, but that's how we tell you to do it.
How much buying power do you think people have gained by I know we didn't like ask you this ahead of time, but say somebody's buying on the bottom end of the market, say they're in like $150,000 range. How much does that interest rate mean to them as far as buying power? Does that add $10,000 to their buying power? Does it add, how much does it add?
Well, let's do the math. If the rates were 4%, now they're 3%, that's 25%. So it's 25% more roughly. So
So,
100,000 goes to 125.
wow. I mean, that's very significant, especially given, I mean, like on the bottom end of our market, as you well know, a lot of people out there might not realize that, we literally are pricing homes from, I mean, I'm thinking of one right now that's 69,000, and then we're pricing homes up to 3.5 million. So there's a very big difference between them. But it's great to know of that type of buying power on the bottom end. So would you still suggest that now is a good time to be buying?
Yeah, well, if your employment looks solid and you've been wanting to get out there, see, here's the thing that's been happening, especially in the market under 200,000. It has been such a busy market that buyers go out there. Well, I'm going to think about it overnight. The house is sold, And as a realtor, you tell people all the time, this is not going to last.
Yeah.
Well, and people, they need a little bit of time to think. It's a big move, but now there might not be as many buyers jumping around, so they might have a little bit more time. So I actually am encouraging people to go out there because it's not going to be as crowded. The rates are going to be lower. One of the things I am frustrated about in this market is that we've had great low rates for 3 weeks, but because the real estate market's been shut down, none of the Michigan buyers has the opportunity to use those.
So here's an interesting question. People who've been laid off right now, how much of an impact is this going to have, and how long is it going to keep them out of the market before they can actually buy? Or will the lenders understand this, and when they get rehired or whatever else, that it won't be seen as a hiccup? Is there going to be any type of like forgiveness or understanding for that?
Sure, there'll be a lot of forgiveness and understanding. The hope is that people don't, their credit doesn't tank, for lack of a better word. Hopefully, the stimulus and the extra $600 for the unemployment checks will keep people afloat till they go back to work. But no, obviously, we will, if you're off work for a month, we won't take that month into consideration as far as income if your income's low. And we do that all the time. That's no big deal. The question mark is going to be, will they forgive this period for, late payments and credit? We don't know about that.
Yeah, because something I noticed on the small business things, and I'm going to be discussing this next week with an accountant, but one of the things I found with a lot of my friends who've applied for the small business loans, all of them have had their credit hit by this loan being applied. So they didn't think their credit was going to be hit, so they're now taking a credit hit at the same time. How much does that type of credit hit have an impact, positive or negative?
If you've got, what I would say average good credit, which is 720, 740 score, my guess is that loan's not going to hit you more than 5 or 10 points. I mean, the key is to, like one late payment can knock you down 50, 60 points. So as long as the payments are made on time, you should be okay.
And what do you see as far as, so I have my own opinions on what this is going to do to the market. Again, we have a very diverse market. We have all of our lakeshore, we have our resort towns, vacation rentals, investment properties, and then we have all of our residentials. What do you think long-term is going to be the impact of what we're seeing right now?
That's going to be directly related to how fast the unemployment rate drops. I assume there's going to be some jobs that are just lost. There are small businesses that just can't make it. They can't get the loan. And so we won't really know that. But employment this is what makes real estate go. If they have solid employment and their company's hiring, they're going to buy a property. Interest rates are the second best thing, but employment is number one. So we'll have to see.
So, I mean, I hate to see some of these businesses go. I know in real estate, we tend to see a drop off of people when we have something like this. But I mean, in theory, the unemployment is meant to help them, but we're not really seeing that come through very quickly. How do you see that as impacting people in the future? Do you think that we're going to see a slow off of small businesses starting up again? Do you think that'll be a bigger impact?
That very well could be. Less people, and obviously people that start up small businesses are currently, are employed someplace else. And to make that jump is a risky jump. And people might just say, I'm not going to do it. I'm not going to do it until the economy, because we're going to come out of this in a recession, whether it's a 3-month recession, a 30-month recession or a 6-month recession, we don't know yet. The hope is it's going to be a short recession, But usually you find that very few small businesses get started during recessionary periods.
I mean, we've already seen the market come back to where it was probably about 8 months ago, 9 months ago. A lot of people have, there was a lot of growth last year. And so where they were seeing 20% returns, we're now at like 5% of where they were. But I mean, that's pretty fast that we're coming back even to that point, don't you think?
Oh, I agree. I agree. The stock market has done fantastic. There's still some stuff to move, but there's a lot out there we still don't know. About the COVID. Everything is starting to improve, but as those numbers keep coming out, that could really hurt and the unemployment. Unemployment's going to drive everything for the next 90 days.
So here's an interesting question. We didn't talk about this, but your office, how many people are virtual and how many people are in the office?
I am the only one here.
Yeah.
We have 9 people at home. People stop by. I come in 3 days a week just to get the mail and get everything, in the right places at the right time. The office staff comes in from time to time. We're all essential to pick up, supplies and stuff like that, and just to get some stuff moved around. But yeah, that's it. It gets a little lonely down here, but it is
All
what
right.
it is right now.
So you're a small business owner, and like many small business owners I know, most of them have like this control freak in them. How are you? Do you feel that you have that control freak, and how are you feeling like you keep it under control and trusting your people to do their job?
Did my wife have you ask this question? Is that where this is coming from?
No, but I love your wife.
Um, Yeah, I was thinking about that this morning, actually, that it's probably a little bit too much. I'm trying to let go of it. My staff has been here forever. I think, I've got 2 or 3 staff here more than 15 years. So I don't even mess with them. I mean, I have to deal with them once or twice a week when they have a question or something like that because I really know what's going on. So I try not to be a control freak, but sometimes you just have to keep things moving in the right direction. And sometimes that takes a little bit of control.
Are you doing like Zoom calls or anything? So you have
Oh,
like
yeah.
office meetings?
Oh yeah, I do staff conference call with my team every day. We do a weekly staff meeting and then we do a daily corporate meeting. So there's
Can
lots of stuff.
I know how you operate, and you like to be out and about and on the road a lot. So that actually means you're not in the office as much as, they might be. Do you see yourself letting people have more flexibility in the future, or have you already been flexible in the past?
We've been pretty flexible. That's one of the reasons why people have stuck around. But I will tell you, everybody wants to get back in here. Everybody is sick and tired of it. Because it works. Where I'm finding the breakdown is it's 90% great, but that 10% when you have a really difficult loan or a really technical situation, that is tough. Because normally you would walk around the office, hey, what do you think about this? What do you think about this? No, no, can't do that. I mean, you can do a little bit of it. Or if somebody sees a document that gets emailed to them that I never saw because it never came into the office and they have to share it with me, it's not as natural. It's like, hey, Kirk, here, take a look at this piece of paper. What do you think about this? And then we figure it out.
So I have a couple of clients, and I've done some interviews which haven't come up. I've got 2 more to do, but their biggest complaint is the loan process. Like, it drives them insane.
Me too. Me too. Drives me crazy too. Oh, you frozen. I think are we done?
Lose everybody. So we might be able to expedite it in the future.
We work on that. We work on that all the time. Everyone keeps threatening that it's going to go into a digital format. It gets worse and worse every year, and it's not going in that direction at all. It's still, we can do online signing and things like that. The big push, which I think that this COVID thing is going to do, is do an e-sign at closing. Fannie and Freddie haven't been able to figure that out yet, and I think that they'll probably start doing that. I think a lot of people want to work from home.
I mean, especially when you're working with people who are moving. If you're not moving from the area to the area, say you're moving from Michigan to Illinois or vice versa, a lot of people, when they sell, they don't want to come back into town. So I've been using mobile closers for years. But the biggest thing I find is people talking about the documentation process. And I just want to give a tip to anybody out there. If you don't have a scanner, and who the hell has a fax in today's day and age, my personal opinion, there's a fabulous app that I know. There's so many other apps. So if anybody has an app, feel free to share it in the chat. But my favorite one is Genius Scan. And it's an awesome app. It actually will scan the page that you do. It can either do it in color. It actually cleans it up as well. So if you're looking, and you can actually both scan and email and post and save and Dropbox from the app. So if anybody's looking to make this simpler, I would tell you Genius Scan all day long. You can literally be at home and do it without needing anything else. What are some of the other tools? What are some of the other tools that you think people should use?
Well, we've always joked when they apply for a loan, we should give them a free scanner. You know, the 3-in-1 scanner is like $30, $40 now. A scanner's key. You know, we'll accept documents, pictures, and send, but they just don't. It's not as good as scanning to an email. We prefer the scan because that means you have a copy of what you scanned, and we have a copy. So there's never any discussion as far as who got it or who didn't get it. It really is the easiest way to do it. You know, we have a secure server here, so the documents are safe. That's really the way we like to do it. It's easier to handle the documents.
So the other thing going forward would be, what do you think would be good improvements that the government could do to the loans to make the loan process simpler?
Well, that's a good question. That's a good question.
The reason I'm asking is, like, for instance, rural development, and I'm not telling you how to suck eggs, you know this, but it goes through your loan process and then it goes to the government and then it has to get approved from the government and then it has to come back again.
Yeah, that's very antiquated. There's no doubt. It's very antiquated. They're working to get rid of that. I bet you, I haven't heard an update since COVID-19 hit, but in the next 12, 18 months, that will be down to a singular underwrite.
And how do you think you're going to be able to manage that? Will whatever you do be good enough for their process, or how will that work?
Yeah. We have the same process with VA and with FHA. You know, we are what's delegated, and we'll have the same type of qualification with rural development. So it'll be fine. The system's already built out there.
So what are the interest rates today?
Interest rates for a 30-year fix is roughly 3.25. It's about 2 3/4 for a 15-year. RDs are 3 5/8. FHAs are 3.625 also, with no points.
And if we're talking like residential, what are we thinking? Like, do you think that they prefer, if somebody wants to go conventional, is there a preference over 5% down, 10% down, 20% down? Are you able to offer all of those?
Yeah, we offer them all. I would tell somebody that the best deal, if you have 5% down, usually is rural development. If you qualify for that, it's usually cheaper in the long run. And if you have anything more than 5% down, at 10% down, conventional loans become a better deal. So that's what I always recommend to people. But you never know. I mean, you never know what the situation is, what their concerns are, that an FHA or an RD might be better.
And why do you think one is better than the other?
Well, rural development is a zero down loan, and you can negotiate for the seller to pay all the closing costs, the taxes, and insurance. So literally, we have people going in with not a penny, and that's very attractive. It's very attractive, and the mortgage insurance is low. FHA allows for you to buy more house than RD does, so sometimes that is better. But it does have a down payment. It does allow for some more struggling credit. Conventional is overall a lower cost loan at 10% down. And that's what people really want. And it's easy to get rid of the mortgage insurance, which a lot of people want to do.
Well, yeah, I mean, FHA changed the rules, was it last year, and said it doesn't matter what you have, we're not removing it unless you refinance. Is that correct?
I think it's close to 10 years ago that they did that. And you're right. And it never drops off. And that's a problem. And that's the biggest downside to an FHA or rural development loan. Rural development, the mortgage insurance is really low. So it's not really, for zero down, it's a steal. But that is a problem. That is a problem in those loans.
I mean, ideally everybody wants 20% down, but it's not necessary. But what percentage of a payment does that then represent?
Well, the mortgage insurances can get pretty sky high at 5% down or 3% down. It gets really high. And you have to have a really good credit score to keep it low. And a lot of people don't. A lot of people don't have great credit scores with low down payments. That's part of the reasons why they don't have much money. Is just they're just new, they're young, they're not earning a lot, and that's why FHA or specifically rural development, it's just a much cheaper loan and it's a much easier loan to start out with. As far as percentages, I was looking at some loans a couple of days ago. They're only paying $300 a month in mortgage insurance, and they have just a ton of money because they didn't have a great credit score when they bought the house.
Yeah, that can make it really difficult. So what is the give me the 3 top points you think people should take away right now about the situation that we're in, because we might do this in 6 months and we'll be a totally different situation. What do you think is the 3 things that people should be probably taking away right now?
Well, first of all, things are improving. I mean, I admit I've been a newsaholic lately, and I've been reading everything I get my hands on to see what's going on, and things are improving. Things are improving. We're having so much different conversations now than we had 30 days ago about opening economies, how we can do this correctly. So that's great. That's great news. Second is if you're comfortable buying, it's going to be a good when we get out of this and you can start looking at homes. It's going to be a really good time to take a look because you're not going to have as much competition and the interest rates are down 25%. And the sellers might, I don't think you're going to see a whole lot of drop in prices, but there might be a slight softening, 2 to 3%, something like that. You might be, it's going to be a better deal than what it was 45 days ago. How about that? And the third thing, if you're hurting out there, reach out. We're trying to do everything we can to help people. One of the things the refinance can do, you skip a payment. So a lot of people are only, in the gutter for 30 to 45 days, so to speak. They're really, really struggling. So if you're still working, and we refinance, you can skip a payment and lower your payment. A lot of people are really enjoying that, and it's really helping a lot of people out.
So is there closing costs involved in a refinance?
Yeah, they're about $2,500. The programs that we offer, and lots of lenders offer them, can roll them in, so you don't come up with any money out of your pocket. And usually we try to do loans that they break even in 12 to 18 months with that. And if they're going to live there for 5 years, it's just money in your pocket.
Yeah. Well, I mean, it's important to know that because if you're skipping a payment, but you still have to come up with money up front, just want to make sure that people understand what that actually says to them. Well, look, I thank you very much for coming on. And maybe we'll do this in 6 months and hopefully we have a little different of a situation going on at that time.
Yeah, I would like to see this would be a great conversation in August.
I agree. I'm looking forward to the summer. For anybody who's watching this and they're out of state, Michigan real estate agents are considered non-essential. We can get appraisers to properties. Lenders can do their jobs. Insurance can do their jobs. Everybody can do their job that we can't. So we have to do our jobs in different ways. Now, like for me personally, I literally have standard made virtual tours part of the way that I process. So I feel like I'm suffering because I love to do open houses. And at this time of year, we have so many people coming into town, but you can still see everything of the homes. And I think that, I think we'll probably see a bunch of homes coming on the market very shortly as soon as they give us permission to be able to do it, because people don't want to be in their homes and they don't want that insecurity of somebody else not being as safety conscious as they are.
Sure.
All right. Well, thanks, Kirk. I appreciate it. And I'll talk to you later.
Thank you.
All right, guys, I hope you learned a lot there. And I'd love it if you guys had any other questions. Feel free to leave them below. I'll be checking up on it. If you have questions for Kirk or you want to know about being pre-approved and the pre-approval process, let me know. I'm going to be using a bit more information in the new home buyer seminar that we're going to be doing this weekend. But otherwise, I hope you guys learned a lot. And if you have any questions, let me know. And I hope you guys have a great afternoon. Bye.